Hey, everybody, welcome back to the Mustard Seed Podcast. This week I have on Jesse Myers. Jesse, welcome.
Hey, Joe. Great to be here. Thanks for having me.
Absolutely glad to chat with you once again. So, this will be awesome. I want to kind of start out with Bitcoin and the current Bitcoin market broadly. Where do you think we're at in this current, Bitcoin bull market or Bitcoin cycle, if you still think cycles exist? Like, kind of give us your high level overview of how you're thinking about Bitcoin right now.
It's a really interesting time for Bitcoin. It's possibly like a very material inflection point, and a structural change for Bitcoin and Bitcoin cycles. And I don't fully know yet. I've had the base case assumption of 4-year cycles will continue until proven otherwise. you know like I think it's probably unwise to assume that things will be different this time, famous last words. So I've tried to stick to that kind of base case assumption of like 4-year cycles will continue, but things have been really different for the last 2 years. And as we get closer to the end of this year, with things not heating up the way that they have historically, 18 months post halving, towards the end of the year in 2017 and then in 2021, the fact that we're not seeing that really pick up, I think every week that doesn't happen kind of lends itself to this alternative explanation that like things are really different now. And I think that's because structurally the market is more mature, and what we've seen over the last 2 years is like a leg up, like a stair step jump in Bitcoin price, followed by like 3 to 9 months of consolidation, just sideways chop that's boring, that totally digests the prior price bump, and then sets a new base, and you do another stair step jump. And we've been doing that for 2 years now, probably a little over 2 years. And it's quite possible that continues through the end of the year. There's no mania. There's no overheated metrics, and it just continues through 2026, and possibly beyond. And that would be really unexpected because Bitcoin market participants are so accustomed to like waiting for overheated conditions, especially 18 months post halving, and then here comes a bear market, and you kind of know the drill by now. But that might not happen, and it might be because the market's more mature, because of Bitcoin treasury companies and how they're behaving. So it really we might be in for a really unexpected sort of 6 months or really 12 months from here.
Yeah, I definitely think you could be right. And I feel like it's interesting coming from you and, thinking about like the past that, we've talked like in the past, we've talked about Bitcoin halvings and how Bitcoin halvings, have an effect on price and over the long time horizon. And like that's kind of been debated, for years at this point. So it's funny to think that now you are maybe suggesting that it's possible that the cycles are changing to some extent.
Yeah, I didn't even realize the extent to which it is quite poetic that we're talking about this, because you put out a chart that inspired how I was thinking about halvings. Gosh, that was what, 5 years ago?
Yeah.
And then that was bouncing around in my brain for a while, and I put together a thread of charts showing like my mental model of how that plays out, which expanded on what you were, the static view that you had put forward. And so, yeah, you and I have been proponents of the supply shock impact of the halving, which I still think is there, but it may be diminished. It may be that it's like overlaid by the forces of a maturing market, and that those might be overpowering the sort of impulses of the halving at this point.
Yeah. It definitely could be right. It's also the fact that you and I are considering this to be a possibility, might be, and saying this time is different, might be a sign that this is the
Yeah,
top, and this time's not different.
totally true. However, we haven't seen any sort of like overheated conditions, or
Yeah.
at least by my definition, and I think most Bitcoiners' definition of what overheated looks like. At no point has it been like, new paradigm, right? Like this thing's going to the moon, like, oh, it's not going to stop, it's going straight to a million. We haven't reached anything close to that. So yeah.
I kind of want to ask you about this, like specifically involving, parabolic Bitcoin bull markets, and talking about strategy in particular as it relates to them potentially. Like when Saylor has talked about like his strategy of, accumulating more Bitcoin, it sounds like he wants to maintain a appropriate leverage ratio given a certain amount of Bitcoin volatility. Maybe that's 20 to 30% debt to the Bitcoin on his balance sheet. Um, do you think that that creates like an interesting incentive to where as Bitcoin rises, he issues more debt and buys more Bitcoin, over and over again? I feel like, people have brought up the idea that, oh, institutions coming in, that's going to make Bitcoin less volatile. But then you have strategy and potentially other Bitcoin treasury companies that, plan to leverage up as the price goes up. And then when the price goes down, they're maybe not buying as much or not buying at all. Do you think that, maybe that could be a source of a parabolic bull run, or do you think that that's still just a small portion of the market?
Yeah, see the mechanics you're getting at there, and that's a really interesting point. I think it's also probably part of why strategy has shifted away from traditional debt, debt that has a maturity date, because that's how you can get in trouble, right? Like if you end up with a 40% leverage ratio and then we have a 70% drawdown, you're screwed. So, I think like the number one thing, the number zero thing that Saylor has to do is like not fuck it up. Like just don't allow yourself to get into a scenario where a 70% drawdown could kill the company. And he knows that, and they've shifted away from ordinary debt, from convertible debt, and into the preferred equity structure that doesn't have any perpetual duration. So there's no moment in time where you suddenly have to cough up the change, which could be that existential moment for, depending on how a bear market lines up, or what covenants are in those contracts that, could amount to a call. Yeah. But you're right that like other Bitcoin treasury companies can and will take on those debt contracts that could, amplify upside moves, because you're allowed to take on more debt when things are going up, and then when things are going down, everybody panics and everybody stops buying Bitcoin. So we're going to see what happens in a true Bitcoin bear market for Bitcoin treasury companies. I actually like, maybe this is overly optimistic, but I think that Bitcoin treasury companies as a sector have their own, endogenous cycles. And we've seen a bear market over the last 2 months for Bitcoin treasury companies as a sector. And I think that those probably are higher like magnitude than what I guess it could line up with a major Bitcoin bear market. But I think that, everybody's worried about like what happens to Bitcoin treasury companies in a bear market, but we just had a bear market over the last 2 months. Things have been down like 80%, and if not more for some of these. And whoever survives that is, going to do okay in a Bitcoin bear market, like a year plus from now, after they've had time to accumulate more Bitcoin and get stronger. So, yeah.
Yeah. That kind of relates to the sentiment of kind of what we've seen on Twitter, where, people will be yelling at Saylor, or not yelling, but, mad at Saylor. Like, why was he hitting the ATM here? He's ruining the company, as some people would say, or he's not managing it correctly. Yet, if you actually zoom out and you look at strategy's performance over the last 5 years, it's absolutely crushed just about everything. Why do you think we are seeing like that, upset behavior on social media? Is it just the market's been moving against it? But like, I guess, why is it so, can people not zoom out? Or how do you think about, people thinking about strategy and yelling at Saylor?
Yeah, I think there's sort of a natural arc of like who your investor base is as a Bitcoin treasury company. I think early on, 4 years ago, investors in strategy thought, "Oh, this is great. This is Bitcoin with a little bit of leverage, and it's going to be a little bit more volatile than my Bitcoin position, and I'll probably grow my Bitcoin ownership." And they were right. But those were like Bitcoiners who were very familiar with volatility and had deep conviction in Bitcoin. And I think we're aligned with where Saylor got to there, of like Bitcoin's the thing to accumulate, and by all means do that. And over time, your stock performs really well and starts to attract a different cohorts of investors who, maybe it starts with people who think Bitcoin's cool, but they also like stocks, and then it ends up with like people who are like, I'm not sure about Bitcoin, but like this stock really performs well, so I'm going to own some of that. And you get you can, and a bunch of other archetypes in there too. But I think you shift your investor base from people who really understand Bitcoin volatility and are unflappable to people who are unaccustomed to an 80% bear market and freak out when that happens. And so when I see that kind of gloominess in the MSTR Twitter groups, and I compare that to Metaplanet or Smarter Web, where it's diehard Bitcoiners who are looking to get more risk, and that, or for the most part, I guess at this point, there's a lot more understanding of the volatility in those groups. I think for a lighter weight, a younger Bitcoin treasury company that's a lot smaller and comes with a ton of volatility, but largely people understand it because they're already Bitcoiners, and I think that's a lot less the case now with strategy. For Semler, it's probably a whole other can of worms because you have a mix of investor types in the company. I wonder, I'm sure you have a decent sense for like what percentage of the investor base is Bitcoin investors versus legacy holdovers from an earlier era of the company.
Yeah, from my understanding, it's been a good bit of turnover. However, it is kind of interesting. There are like a few people, or a few like institutional investors, or just very high net worth people that had a healthcare background, and then also happen to be pretty big Bitcoiners, and like those are like kind of the ideal people that are like incredibly excited about Semler. But I know from transitioning from this value based healthcare business to now we have 5,000 Bitcoin in our balance sheet. It's a very different investor mindset and like volatility preference, as you pointed out. Like normal investors, like I'm thinking about just non-leveraged Bitcoin. Normal people are very uncomfortable seeing an 80% Bitcoin drawdown, and especially if that's a large majority of your portfolio. Like that terrifies so many people. And Bitcoin treasury companies are amplified Bitcoin, as Saylor says, and it's like that means it can do worse than 80% if Bitcoin does 80%. But it can obviously, and like the reason why we're all here is, well, we think Bitcoin's going to go up significantly higher, and therefore we want amplified Bitcoin to the upside. But people, I guess, forget that in the short term, it can work both ways, unfortunately.
Yeah, it is interesting how the amplified nature of it I've been thinking a lot about this, just kind of watching this bear market over the last 2 months. Really run a full course, I think, in terms of like market psychology. That amplified volatility, like it's hard to take an 80% bear market and then and square it, right? Like, and then do another 80% drawdown from there. Like that, what would that be? Like 96% drawdown or something. Um, and that isn't how this manifests, right? Like, so you can't just like magnify the moves, but instead the market finds a way of like making it all happen way faster. So like you're amplifying the volatility by compressing the same price moves into, like a 12th the space. So it really feels like, and Dylan has talked about this at MetaPlanet, that they seem to see a cycle every 4 months, like a classic cycle, and we seem to have gone through a bear market in 2 months, so that fits. And so it's really weird that this is how you get, in Bitcoin we talk about the volatility is good, right? And you want that volatility, and then Bitcoin treasury companies can magnify that, amplify that volatility. It's net a good thing. It sure feels bad when you have a bear market in 2 months, but you want that because you can speed run 4 cycles in a year, and it's taken 16 years for Bitcoin to do that. So ultimately, you want that volatility and that. And so I'm very bullish on like this point in time for Bitcoin treasury companies, because I think we've reached like the end of a pendulum swing in terms of sentiment, and hopefully it starts to swing back the other way pretty quickly if that compressed timeline holds true.
Yeah. What do you also think about looking at historical Bitcoin volatility itself? Like, I think I've seen people point out that as of recently, this is one of the lowest Bitcoin volatility periods in the history of Bitcoin. I think, like, from what I've seen, like, it's somewhat similar to early 2017, where like Bitcoin was kind of going back over $1,000 and it was kind of just boring and sideways / up, which may be kind of what it's doing now. Like, that was a relatively historically very low volatility period for Bitcoin. What do you make of the current low volatility in Bitcoin itself?
Yeah, I think that's probably the result, and I don't know, maybe I'm wrong, but I think it's probably the result of the market maturing, the asset class maturing, and TradFi bringing in tools to kind of dampen volatility and manage it out, profiting off of volatility, and then the process kind of dampening that volatility. I'm thinking about early 2017. That would have been 6 months, 8 months post halving, and puts it in a different place in the cycle, in the 4-year cycle, right? Than we are now. We're like 16 months post halving. So this should be, based on our mental model of this should be like getting a little wild, getting crazy, getting overheated, and it's not doing that. And instead, it's like low vol. And I think that's part of my hypothesis about like, okay, so if we're low vol, we won't get overheated, and if we don't get overheated, we can sustain this trend for way longer. Like you only top because things get too overheated. So if you're not getting overheated, then we might just be in this new structure for the foreseeable future. I forget the numbers. Do you happen to know the like recent Bitcoin vol? In my head, I remember 43% annualized vol, but
that sounds about right. Maybe like 40-ish.
Yeah, and my most recent numbers for Smarter Web is 220, which I ran a couple weeks ago. 220% annualized vol, which right there, that kind of shows you it's like it's Bitcoin squared.
Yeah.
In terms of its volatility. And yeah, I don't know why obviously as a new asset class matures, its volatility will go down, just by definition, as it becomes bigger, as it reaches more parties and more financial instruments are built on top of it. All of that amounts to a maturing asset that decreases volatility. There's still plenty of volatility in Bitcoin, and obviously, I think we're very, very far from fully monetizing Bitcoin. Again, this sort of comes back to, like, we may just be in a new era for Bitcoin if it's no longer driven by like speculative retail investors, buying coins on exchanges and then panic selling coins on exchanges. Now we have TradFi and derivative instruments kind of taking some of that volatility out and maturing the asset overall.
What do you make of gold's recent, even over the last 12 months, like pretty incredible price move? I mean, the market cap of gold, or total value, estimated total value of gold in the world, has increased by more than Bitcoin itself, a pretty significant amount. And it's pretty much one of the best performing assets. And Bitcoin kind of has lagged maybe this year, especially compared to gold. What do you make of that?
Yeah, that's a good point, that gold has grown more than Bitcoin's market cap this year. It's kind of wild. I think this is one area where I slightly disagree with Saylor. In my valuation framework, from Bitcoin's full potential valuation, which I put out, and then those slides got picked up by Saylor, and then he kind of built his Bitcoin 24 valuation model based on top of that same methodology and added his own assumptions on top. In that model, the whole point of it is to take stock of how much value is in each asset class in the world, and then kind of put a finger in the air and say, okay, how much value parked in each of these buckets would be interested in migrating to Bitcoin once it learns about Bitcoin's properties. With the sort of assumption in there that, like, Bitcoin has better properties than any of these analog store value buckets that we've historically used to park value. And so in that sort of framework, I assumed originally that Bitcoin would take market cap from gold. But then, later I started to think more about how, well, gold is kind of undervalued right now, like, or overly small relative to its historical norms. In 1980, global gold was worth the same as global equities. They were both 1 trillion. It's a good slide from Peter Thiel on that. And since then, I guess he put out that slide at a time when gold was like 10 trillion or 12 trillion, and global equities had become 120 trillion. So it was a few years ago. And the point he was making by that is, like, we're due for a structural shift back from financial asset valuations and back towards hard money value. And so that's gold historically, and now it's gold plus Bitcoin. And when you think about gold and Bitcoin, I think that the hard money category, gold plus Bitcoin, will do very well. And within that category, Bitcoin will do much, much better than gold. So, whereas right now, I guess it's even less than 1/11th. It's probably like 1/15th gold. Bitcoin's probably like 1/15th the size of gold at this point. And I think that, Bitcoin will grow to become parity with gold, while gold itself grows relative to, other asset buckets in the world. So I think that, whenever gold makes a move now, it's sort of it's a good indicator for money shifting to hard money assets, because fiat asset holders, by which I mean people holding dollars or any other currency, and people holding bonds, which are, contracts for future dollars or other fiat currencies. Some portion of those investors are waking up to the inevitable math that true inflation will be higher than the yields that they are generating by holding those bonds. And so, every year you're holding a 4.5% U.S. Treasury 10-year bill, you're actually probably destroying 2.5% of value, because true inflation is like 7%. So all it takes is investors waking up to that reality and then saying, well, I should probably sell some of my bonds and shift some of my portfolio to hard money, because that's what did well in the 1970s, the last time inflation ran hot. And structurally, we have to have inflation run hot over the next 10 to 20 to 30 years because of the sovereign debt levels in the world. So, I think it's investors slowly waking up to the reality of the math and the structural shift that has to happen. And that money flows to hard money assets. So, when gold has a sudden run, I think it's a very good sign for Bitcoin. And obviously they're not like immediately linked, but if money is flowing to hard money assets in general, in volume and in scale, as you point out, like, the total value of all the gold in the world has gone up more than Bitcoin's value this year, then a small portion of that flowing to Bitcoin will, could 2x Bitcoin pretty easily, and you'd still be far away from parity with gold. So, any way you look at it, it's just pretty incredible setup for Bitcoin.
Yeah, I certainly tend to agree. And I think that your total global wealth chart is very helpful for me and probably so many people, because like it shows you like how much wealth there is in the world that's outside of Bitcoin in these arguably inferior, overvalued traditional asset classes. But then two, it also kind of makes it to where like, okay, you can kind of very clearly see that there's probably these monetary premiums embedded in these traditional asset classes, and the money is broken. The world needs better money, and Bitcoin is the better form of money here. I'm curious, like, have you done research, or do you have any idea of like total global wealth, compiling all of those together? Like, how fast has that been growing over the last few decades? Like, is it matching the money printer? Is it like 8% per year? Is it like 5%? Or do you have any idea? I'm not really. I have my guess, but I'm not sure.
Yeah, I don't really know. I have 2 years of data on that. So the first time I made that global asset landscape chart is 2023, early 2023 data. And I went through the exercise of getting a tops down triangulated value for each of the buckets of each asset category in the world. And yeah, it's a rough approximation, which I made a point of clarifying in my original report. And most people haven't read that original report, so they take this chart as a precise gospel. But it was always intended to be a rough estimate, a triangulated estimate, which from my experience at Bain, doing exactly these exercises, like you get really close through that approach. So it's probably within 5%.
Mm-hmm.
But when I put that out in 2023, the total asset landscape value was $900 trillion. And then I redid the analysis a few months ago, and came up with a number of 1,000 trillion, which I was very happy to see. That was what it came out as, because that suggested 7% growth per year for 2 years, and that lines up pretty well with what you'd expect, because the global M2 has been growing about 7% a year for decades.
Mhm.
And so, my mental model is the denominator of how many dollars there are in the world impacts, everything, right? So if you grow the money supply, things tend to increase in value in lockstep nominally, right? But in real terms, they don't. And that's part of why it's valuable to take stock of the global asset landscape so that you can see the relative shift of how certain asset categories are growing relative to the others, because everything's growing together, and you need to isolate that or factor out that growth in order to see if you're getting richer on a relative basis or if you're just treading water. So yeah, I think I only have 2 years of data, but I enjoyed seeing which asset buckets are growing relative to that 7% growth rate. Bonds and fiat money are decreasing. So on relative to that 7%, they are decreasing, I think 3% and 1%. And then everything else was more or less treading water. And then gold and Bitcoin, gold was like 20% a year increase, and gold and Bitcoin was like 120% per year over the last 2 years. So that is not a large sample size, and it does involve quite a bit of estimation. But I think that's probably what's going on right now. Is there's a ongoing shift of value on a relative basis from fiat assets, fixed income bonds and money, in towards hard money assets, gold and Bitcoin.
Mm-hmm. This one might be kind of like a pointless thought exercise, but I find the question kind of pretty fascinating. I asked Saylor this too, and I said, like, long term, what do you expect like the terminal growth rate of Bitcoin to be in dollar terms, I guess, if you assume that the dollar still exists? And he suggested that it would be like 14 to 20%, something along those lines. I'm curious, do you agree with that? Do you have a different opinion? And like, how do you like conceptually think about it? I know it's like very long term and kind of impossible to really know, but I'm curious if you have an opinion there.
Yeah, that's so tough. Yeah, I have a bunch of thoughts here. So first, we're living through the S curve of Bitcoin monetizing and becoming, I think, the preferred store of value asset for the digital age. And the first question there is like, what is the plateau at the end of that S curve? First of all, it doesn't help to say it in dollars, because what a dollar means changes over time, and so it's kind of meaningless. And that's where thinking about it as a percent of global asset value is a very helpful way to think about it, because that doesn't change. And that's where, my first Bitcoin full potential valuation piece, I made some pretty conservative estimates because I didn't want to get too crazy. And that came out to 20%, end state 20% of global asset value. Saylor has said, in theory, he thinks half of all asset value is just looking for the best store of value asset. Bitcoin is it. And over time, Bitcoin will consume all of that, absorb all of that store of value use case. So that would mean 50% is the end state of the S curve. So it's probably somewhere between there, right? Like, maybe.
Yeah.
Okay. It's also possible it's outside of those bands, but I think that the plateau of that S curve is probably somewhere between 20 and 50% of global asset value. Yeah, and then so when we reach that full plateau, that really could take 50 years, or even more. And so I think it's, when we're talking about like what's the terminal growth rate for Bitcoin, like we have to talk about it as like 100 years from now,
Yeah,
to really isolate, what that true terminal growth rate is. And then to me, the answer becomes whatever the M2 growth rate is plus true GDP growth. And because the thing that the global asset landscape chart doesn't really isolate well is like the world is getting richer by some small percentage every year just through GDP growth. But the dollar is also debasing at a much larger rate, and so that kind of dominates. But so I think that's kind of my mental model of like how Bitcoin tracks long term. You're going to capture all of that GDP growth because it's a finite supply asset, so that flows into the value of each unit, and that's how I think it's tremendously beautiful for the future, because you will be in a perpetual state of deflation, and that means your money gets more every year, and everything costs a little less every year, and that will be great. That'll be everything that was good about the American Revolution until the advent of central banking in 1913. We lived in the gold standard, and craftsmanship reigned, and we that sort of culminated in the Gilded Age, which had plenty of ugly sides to it too, but craftsmanship and quality of goods was through the roof, and that was because you had 150 years of very slight deflation, where the gold money supply was growing at like 1.5% a year, and GDP was growing at like 2 or 3% a year. So that the delta there is deflation, and that resulted in a flywheel of goods getting better every year, because in order to command the same prices, a supplier, a vendor, a manufacturer had to make their product a little bit better every year, and that's a flywheel of craftsmanship. And obviously over the last 50 years, we've had the exact opposite flywheel. Everything has to get worse every year in order to keep your prices the same. So that's I think that end state of that S curve is incredibly bright for what it will do for the world, because you still have even though you've fully monetized Bitcoin, you still have deflation just from holding it.
Yeah, I agree, and that makes a lot of sense to me. I think part of the reason why I'm interested in that question or topic is I feel like it makes the case for even holding Bitcoin today even more sound, because then I can be like, okay, Bitcoin should match M2 growth plus technology deflation or GDP growth, or some form of, we're getting wealthier naturally, and that's going to go into, a high quality asset. And then you can say, okay, well, if that's the case, then maybe Bitcoin should be growing at, 12% per year, 15 or 20% per year, whatever it would be. And then you can be like, wow, like even if adoption stopped today and no new people decided to buy Bitcoin for whatever reason, it's still a pretty good asset to be holding. It's probably still the best asset. Like you don't even want to buy anything else at that point.
And that's why the halving doesn't get enough credit. The supply schedule of increasing scarcity causes that to, causes Bitcoin, even if there's no new adopters, causes Bitcoin to appreciate in purchasing power over time. And then that, begets the game theory of like, well, if that's true, then I should buy some.
Yeah.
And then you increase adoption because of that, base case scenario of like, even if nobody new adopts it, we're still going to get, better purchasing power over time. So, to me, it all of Bitcoin's attractive properties as a money, as a store of value asset, come back to the supply schedule of increasing scarcity, terminating in absolute scarcity.
I do want to ask you more specifically about Bitcoin Treasury Company, especially, me now being at Similar Scientific and you being at Smarter Web. I'm definitely curious to get your thoughts on a few of these questions. Like, what do you think should be the primary KPI metric for a Bitcoin Treasury Company that's obviously trying to generate stockholder value or shareholder value long term? What should be each company's primary KPI metric, or could it vary, I guess, between different companies?
Yeah, this came up earlier today, and the joke was that it should be how many times you can make Peter Schiff cry on Twitter as the chief KPI. Um, but I think I think it varies based on the goals of the company. I think for a pure play Bitcoin Treasury company, the metric that matters is Bitcoin yield. I think that that's the core metric. And of course, you need to balance that against what the MNAV is at any given time in order to determine how undervalued or overvalued that stock is at that point in time. Earlier this summer, we put out the report on this, trying to come up with a PE ratio equivalent for Bitcoin Treasury companies. And it was called the P-bid ratio, price over Bitcoin yield delivered. And the math gets a little bit complicated because there's like log terms involved. But if you're isolating if you're using the MNAV and then taking Bitcoin yield delivered over a defined unit of time, the trailing 1 month or trailing quarter or trailing 6 months, whatever you want it to be, and then you normalize it for that, you normalize it for a year, the net result is how many years it will take, assuming you continue to deliver the same amount of Bitcoin yield in that per unit of time, how many years it'll take to grow into your MNAV. And that, I think, combines everything that's important for a pure play Bitcoin Treasury company, in terms of like assessing relative value between Bitcoin Treasury companies, but perhaps more importantly, between Bitcoin Treasury companies and traditional equities. Because, with traditional equities, people are so accustomed to PE ratios are 20, 30, 40. And really that means like 20, 30, 40 years of, the same profits that this company has been delivering over the last year, to earn back the premium you're paying now to buy that stock. And people lose sight of that when they then look at Bitcoin Treasury companies and say, wait a second, you're delivering Bitcoin yield, but so the traditional equities focus on the income statement. Bitcoin Treasury companies are all about delivering value through the balance sheet. And based on the rates of yield delivery, Bitcoin per share increases over time, and the MNAVs, the pretty modest MNAVs they trade at, these things are delivering value in like 2 years or less. I haven't revisited the numbers in a few weeks, but I think strategy is at like 2 years or maybe a year and a half at this point. Metaplanet's like half a year less probably now, quite a bit less, I would guess, probably a quarter of a year, and Smarter Web's at like a quarter of a year. I actually don't know what Semler's at, but I think that metric is, I think, the most important one to holistically assess the relative value that you're getting from investing in a Bitcoin Treasury company, and especially in comparison to traditional equities.
Mm-hmm. There's definitely, a very big difference between how you think about valuing traditional equities and how you think about potentially valuing a Bitcoin Treasury company. What do you think is like driving MNAVs? Is it, obviously I agree with you, like the ability to increase Bitcoin per share is like critical, and like that's to me like why you would pay a premium for any sort of company. But also like you mentioned, like we saw this 2-month bear market in the Bitcoin Treasury company space. Is that just like a cyclical bear market that has like little to do with like the execution, or is it like something else? Like, how do you think about why MNAVs trade the way that they trade?
Yeah, it's funny. There was recently some like disagreement on Twitter about like what an MNAV means, and I couldn't understand the like opposing views. To me, it's so clearly an indicator of market sentiment about future capacity to deliver Bitcoin yield. With some amount of discounting that future Bitcoin yield to the present. And it's just so volatile and so sentiment driven. I think that when the price is going up for any Bitcoin treasury company, it sure feels like the model is just going to work really well and keep working well and keep driving the price higher. And then when the tide goes out, it feels very doom and gloom, because there is like a reflexive, recursive nature to the inputs there. Like the higher the MNAV is, the better you can execute. And then when that trend reverses, it gets harder. And so that all gets, there's some amount of rational assessment that is included in MNAVs, but I think the reality is like so overweight irrational sentiment. Like 10% of it is rational assessment, and 90% of MNAVs is just kind of market psychology and current sentiment, not based in math. It's not surprising too. It's like it's a brand new industry that only individuals currently understand. So like it's the universe of Bitcoin treasury company investors is pretty limited to like Bitcoiners who are interested in taking risk and understand financial engineering, enough to like get on board with what a Bitcoin treasury company is trying to do. That's a small group of people. And, you see this too, of like the conversations we have with institutions. They're trying to figure out like what to make of this business model, but for the most part, they're like, this sounds kind of crazy. And that's just the reality of a brand new financial industry, is individuals can wrap their heads around it first, and committees and institutions where there's career risk involved in taking a chance on anything are going to be slower. So I think that amounts to sentiment drives everything in this market right now, and people have so few years of data to draw on that there's wild swings in confidence about whether or not this model is sustainable. And in a funny way, I think that's what we saw in the UK over the last 2 months was like, well, over the last 4 months, Smarter Web showed up, did really well. A bunch of people decided, okay, well, we're going to do the same model. And some of them, added a lot of market cap very quickly because a lot of investors thought, oh, that could be the next Smarter Web and I'll get in 10x earlier. And then the tide goes out, and those companies that never really got to like, the infrastructure in place, the track record of delivering Bitcoin per share increases, saw their flywheel stall and their investor bases give up, throw in the towel. And 2 months later, Smarter Web is in a much stronger place on a relative basis, relative to like the 25 other quote unquote Bitcoin treasury companies that popped up in the UK. And so, that's how this volatility kind of filters out. Companies that either didn't fully understand Bitcoin, were never fully committed to the Bitcoin treasury strategy model, or didn't have the leadership, or credibility in place to have staying power through a downturn. And a lot of those companies also like stopped communicating with their investors, and that's kind of fatal too. So it's to me, it just feels like it's the very early days of a brand new industry, and that comes with a ton of volatility and uncertainty in whether or not this is going to stick around. Is this the next mega trend for the next 20 years? I think it is.
Yeah.
Or is this some tulip fad, right? That's like, it's unsustainable. I don't think that's the case, but I think we need cycles like this to build that confidence. And the cycles are like a manifestation of the investor base trying to figure out what's real and what's not. And you're going to have swings in confidence. And those swings will decrease over time for the established players, right? Like, you see strategy not have as much of a drawdown as Metaplanet, and then Smarter Web has an even bigger drawdown than Metaplanet, because there's a different degree of track record for those three.
Yeah, it is interesting how someone could think it's a fad to me, because like at the end of the day, I mean, these companies are just sitting there, holding Bitcoin, right? Like, obviously we're coming up with creative ways to acquire more Bitcoin in a creative manner for shareholders. But like, if we're right about Bitcoin, and, our thesis is Bitcoin is going to take the monetary premium out of all these other asset classes, and Bitcoin's going to probably, if that thesis is correct, it's going to outperform all of these other asset classes. And like arguably many of these companies are just sitting on a gold mine, and it's just like a matter of time until the world wakes up and realize, oh my gosh, like I need 1,000 Bitcoin too, or I need, X thousand Bitcoin as well. Like, it seems like it's really just a matter of time. Do you agree with that?
Yeah. I think that's right. The best thing that a company can do for its shareholders, in my opinion, is accumulate Bitcoin. And every company should be doing this, and they're not. And by the time every company wakes up and says, wait a second, we should be accumulating Bitcoin, it will be pretty much impossible for a small company to acquire 1,000 Bitcoin.
Yeah.
Right? Like, that'll be reserved for your Fortune 500 or your Fortune 2000 companies. So it's an incredible opportunity for a company to stake a claim to, in the digital gold rush, to the capital asset of the future. And, whichever companies accumulate large stacks of Bitcoin now become the best capitalized companies in the world, for the 21st century. And it's like, it's a no-brainer when you think, like, if you believe in where Bitcoin is going, then the absolute best thing that a company can be doing is accumulating as much of that as possible. And it doesn't have to be the like pure Bitcoin treasury company strategy. Smarter Web is trying to follow the Metaplanet path of like grow from nothing in a specific capital market jurisdiction and regulatory framework, and be the leading Bitcoin treasury company in that jurisdiction. And we're trying to do the same thing that Metaplanet's done over the last 16 months. And there are a bunch of companies, especially in the US, who are taking various approaches to like, how do you accumulate Bitcoin, and then how do you deliver Bitcoin yield on top of that. But any of these companies, like, you're putting your company in a stronger place than it was just because you've accumulated Bitcoin. Even if you generate no yield in the end, but you've accumulated thousands of Bitcoin, that's fantastic. And that's also like not even getting into they're the pure play Bitcoin treasury companies. Then there are going to be companies, like operating businesses, that are profitable, that shift their treasury to Bitcoin, but don't try to use capital market tools to add to it. And then there's already like Tesla, who has a tiny bit of their treasury just sitting in Bitcoin, and they don't talk about it. And, they probably regret not doing a larger percentage into Bitcoin, but that Bitcoin, I don't know, it's up like 4x, something like that for them since they did it.
Yeah.
And in the vast majority of companies will fall into the latter two buckets, because I think it's winner take most in each capital market in the world for the pure play Bitcoin treasury company strategy. strategy is that in the US, the winner take most. And in Japan, it's MetaPlanet. We hope to be that in Smarter Web. Of course, there's still room for, beyond the winner take most, there's room for other successful Bitcoin treasury companies who are adding Bitcoin per share in each jurisdiction, especially in the US, just because it's such a large capital market. And each of those are going to have to do something slightly different to have their own spin on, on why they're the right partner besides strategy. Everybody will have to have their own spin, and we're seeing that sort of experimentation now.
Yeah, absolutely. Last question, then we can close it out, Jesse. 10 years from now, when Bitcoin adoption is accelerating and hopefully far higher than it is today, what do you think will, looking back, what do you think will be most surprising to most people that are here now that may not see something coming?
Interesting.
Is it this Bitcoin treasury company play? Like, I still feel like it's an underrated it's a hated trade, I feel like, among Bitcoiners and among TradFi. Like, that's an obvious one, but
yeah, I have two answers here. Yeah. I think that Bitcoin treasury companies are going to be the big story in global finance for the next 20 years. I think in the way that nobody saw Bitcoin coming for the last 16 years. And obviously that was the big story, the big trade. I think that Bitcoin treasury companies are that for the next 20 years because they will help facilitate the flow of capital from TradFi buckets, especially from fiat asset buckets into Bitcoin, because those companies will create the products to go entice capital in the fixed income market in particular to hand over dollars. And that's what Strategy's pioneered here with like going to the fixed income market and saying like, hey, well, I'll give you 10% a year. And look at how like over collateralized my balance sheet is. So I'm really, low credit risk. And this is a win-win for everybody. Like, and then the, fixed income capital that says yes to that hands over dollars. Strategy buys Bitcoin. Bitcoin appreciates at 30 to 50% a year, and they've got no problem servicing that 10% a year debt. And so I think that story plays out with Bitcoin treasury companies in general, and that's how they'll generate yield long term. And they'll end up becoming massive companies because they'll help facilitate the flow of a huge portion of capital into Bitcoin by creating these products to meet that capital where it's at. So that I think is going to be very surprising to Bitcoiners and especially to the broader world, as everyone's trying to figure out what the hell is going on with these Bitcoin treasury companies. How are they able to grow so fast? Oh, it's because of their P-bid, and the fact that value delivery is happening in a fraction of a year, and the market just has to figure out how to price that, digest that growth. And it does it through hyper volatile, every 4 months, a full sentiment cycle, and 220% annualized vol. Like that's how this keeps playing out, I think. The other answer I had that first popped into mind is like, I think 10 years from now, we'll be talking about the first G7 or maybe G20 countries actually getting Bitcoin as part of a strategic reserve. And I think that will be surprising because everyone thinks it's going to happen now. But I think that there's all these reasons why, committees are the last entities to say yes to Bitcoin, just because of all the inertia and all the tipping point you need to achieve in a committee. And for that reason, governments are going to be some of the last entities in the world to seriously consider Bitcoin as a treasury asset. So I think that that doesn't happen now. It starts happening 10 years from now, and then we'll be talking about that in 10 years, and people will be surprised that it only just started then.
Yeah, that's a good point. Well, Jesse, this has been awesome. Always fun to talk Bitcoin and now Bitcoin treasury companies too. Where can the audience go learn more about you and Smarter Web too?
Yeah, I'm on Twitter at at Croesus_BTC. Constantly exchanging messages with Joe and being a reply guy to him on Twitter. So you'll see me in Joe's replies. And you can check out SmarterWeb, smarterwebcompany.co.uk. Go check out our analytics dashboard, see our track record, and then you can also see the sort of current sentiment from like share price and market cap that is, I think, disconnected from the track record because of the last 2 months of bear market, which now seems to be turning. So go check that out if you're at all interested in Smarter Web, or if we are on a path to be Metaplanet for the UK.
Awesome. Well, Jesse, thanks again. This was fun.
Thank you, Joe.